Hey everybody, Matt Shoup back with M&E Roofing Solutions and M&E Painting, and in this video we're going to talk about what happens after you file your claim. The adjuster comes out, the adjuster says, yes, Mr. and Mrs. Homeowner, you have hail damage, here you go. And they either email to you or they hand you a big stack of papers and they give you a big check. And sometimes that big check is made to you and your mortgage company. And the biggest thing though is there is a huge stack of papers. You could have what's called a loss statement. That is a recap of everything that was damaged in your claim and how the insurance company is going to pay and compensate you to take care of it. Now, the first time I saw a loss statement I actually saw it the first time as a contractor, then I later saw one as a homeowner. They're very confusing. It looks just like a massive spreadsheet over multiple pages. And what it does is it breaks down all of the bits and pieces of your home. And here's a couple of things that you're going to see on the loss statement. So typically on a loss statement, first thing that an insurance company is going to break down is your roof. They'll break your roof down into all the different components and pieces of what the job looks like. So you need to remove the roof, throw the debris away, clean off the decking, put down underlayment, put down shingles, put down everything flashing, and they break everything down. And across the top, you're going to see a couple of different numbers. The first thing you're going to see is RCV, that is replacement cost value. They are going to give you the retail replacement cost total of what it should cost to replace your roof. But then you're going to see a number on the other side of the paperwork called ACV. That's going to be actual cash value. The difference between these two numbers is the depreciation. So if you have a $20,000 roof and it's halfway through its life, that insurance adjuster will depreciate that roof by 50%. So they're not going to give you $20,000 up front, they're going to give you $10,000 up front. And then when you complete the work, they will release that depreciation. That's called recoverable depreciation. A couple of other things that you're going to see on an insurance claim. You may see O&P, overhead and profit. If you have multiple items on your home that need to be repaired, insurance companies will pay 10% additional of overhead and another 10% of profit for a general contractor to manage all of these different trades and contractors. And we'll talk more about independent contractors versus general contractors, but you may see numbers for O&P, overhead and profit. You will also see that there's a deductible, there's a responsibility that you as the homeowner have to pay and meet to get this insurance money paid out. So basically what happens at the end of the claim is they're going to say, here's your replacement cost value for everything. Here's how much it's depreciated based on age, wear, and lifetime. Then they're going to minus your deductible. The way you pay that is it gets taken right out of your claim money right up front. And then that actually leaves you, they do replacement cost value minus depreciation. That gives you a cash value. Then they subtract your deductible, and then that gives you a net check that they will actually hand over to you when the claim is over. There's a couple of other things. Code upgrades. Depending on where you live, your municipality may require that you need to do a higher grade of shingle, or you need to do extra types or styles of underlayment, drip edge, things like that. Those items can be something called paid when incurred or code upgrade items, which means the insurance company will pay you and then you pay the contractor once those items are taken care of. So again, just know when you get a loss statement, a really good contractor that you trust should be able to and will help you understand what all that means. And the first red flag is if you have a contractor that just wants to get a hold of your loss statement and then say, I'll just deal with billing the insurance company, don't worry about it, and they keep you in the dark, that is the first red flag that you should not hire that contractor. An amazing contractor should sit you down, explain what every single penny on that statement means so you understand how and when this money comes to you, when it goes to the contractor, so there's no surprises and there's no funny business, because there's a lot of funny business in this business. So come back, watch some more videos, and we'll dig a little deeper into some of these things.